I do want to stay on the big tech names. By the way, we just have them up there for you. Mixed bag. Facebook the most under the most pressure, and bring in Ray Wang, Constellation Research founder. Ray, everyone's really now starting to get excited about 2019. It's going to be a big year for IPO, tech IPOs. I want to go down the list of the ones that you're looking at. Let's just start with Uber, right? Because it's probably the most valuable unicorn out there. I guess the private valuation in the $65 billion range. How would an IPO look to you on this?
You know, Happy New Year. Uber is like hot, right? 75 million riders. We're talking about 4 million drivers. I mean, this is a big, it's probably the big granddaddy IPO that's going to happen in 2019. Anywhere from 60 billion to 120 billion is what they're saying. It's going to be out on the valuations. So it's a wide range, and I think they're competing with Lyft to get out first. And that's what's going to make it kind of exciting to see who goes first and how they react.
Does it really matter? Because Lyft is, what, almost 10 times smaller than Uber. And the book runners right now, Ray, they're looking for something rich, like a $120 billion valuation for Uber, for a company that's still losing over $1 billion each quarter, and they're not expected to be profitable, at least for another few years.
You know, it's just like how Facebook got started. It's just like how Netflix got started. Massive base, lots of users, and then additional services that get put on top. You're seeing it already with Uber Eats. You're seeing it with other alternative transportation areas. They're gaining ground. And the real question is, are they getting the monthly adoption? And are they getting their average revenue per user? And I think they are. And they're showing that growth. Dara's done a good job of doing that and also turning around a lot of the issues that were going on before with Travis.
You know, of course, the composition of these IPOs, you know, how many shares, how much they raise, how much money they raise, the share price offering. Let's not forget Facebook. As it started, the demand was there. They kept increasing the amount of shares and raising the offering price, increasing the amount of shares, raising the offering price. And the stock actually was a dud. It was a disaster in the first couple of months of trading. Are you concerned, you know, as that these big hype names could actually not necessarily be great investments for average investors out the gate?
I think out the gate, it's going to be slow. People are going to be worried about whether they can add the users. They're going to look at the losses. But overall, what we've seen, big tech has the platforms. And overall, those platforms have actually proven to create winner-takes-all markets. Who's going to jump in after Uber and Lyft? The third player is going to have a tougher time. And that's been happening in almost every one of these winner-takes-all markets in big tech. The other piece is, I mean, this is a big IPO season. We're talking like 200 billion in terms of potential IPOs coming out of the gate in terms of valuations. And so, I mean, when you look at the big five that are coming out, from Uber to Palantir to Airbnb to Lyft,
Slack.
I mean, these are big numbers that are coming out for the next couple months to watch out.
Well, do you have a favorite yet, Ray, or do you want to kind of see what the offerings look like?
Actually, I think Airbnb is the one that I think it's going to do the best out of them. And the reason it's because of the base and because of the market. The consumers that are on Airbnb tend to have been moving to, you know, more usages, more visits. They've shown how the model works. Companies like Marriott have taken notice and actually are trying to compete against that. And then, of course, it's going to be interesting to watch Palantir because it's super hyped. But the thing with Palantir is they've gotten the big governments, they've gotten a lot of corporate CEOs to take a look at analytics and big data as they go to digital transformation. There's a lot of hype in terms of how they operate because it's a lot of services, but the main thing is that there's a lot of momentum in terms of the type of companies and the type of pedigree that's coming out of that one. So that one's going to be interesting to watch as well.
Ray, before you go, I want to ask you about Netflix's Bird Box, breaking all kinds of records. Of course, that's a Sandra Bullock thriller. It's been viewed by 45 million accounts. What does it mean? What would the implication be for Netflix? Because the stock's having a really good session today.
Oh, you're going to see massive monthly active user growth. Can you see the bags on my eyes? We've been watching that all weekend. That thing has been hot. I mean, think about 1/3 of Netflix's users. 1/3 of them actually downloaded it, and we don't know how many other people were in the room watching. So original content pays. The $8 billion to $12 billion investment that they've been putting original content is actually showing quality, and I think they've won the Christmas season. So this is the new TV.
Hey, real quick, someone earlier suggested, one of our guests, that this is the kind of movie they probably should think in the future about debuting on the big screen.
You know, that's true. They started doing that. They started putting releases 1 to 2 weeks earlier so that they could qualify for Oscars. There are a couple films that did that earlier this fall, and I think that would help them get the buzz. And I think your earlier guess was right. I mean, to get that buzz, and it helps the actors, you know, be nominated for an Oscar, actually helps a lot getting the right type of producers.
All right, Ray, have a great New Year. We'll see you again real soon.
Hey, Happy New Year.
You too.